The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan with the weekly perspective for the week ending 13 February 2026. Well, briefly, just on the landing page here, step one, join our community. That's the free list. We ask if you would like to watch the Four Horsemen video and also the one Silver Sunrise. And the last one is if you're interested in exploring our memberships. So I want to talk about physical silver in the free float. So I want to go ahead and look at China first. This is the SGE, Shanghai Gold Exchange silver withdrawals. And it goes back all the way, as you can see, to 2016. You can see that last year, 2025, was not the largest, but near the top. And so far this year, with 6 weeks into the new year, we're kind of on the same quantity of silver per month that we were in the previous year. So if things flow at the same flow rate, we'd probably be up in this level again for 2026. And now if we look at the Comex, we get to take a look at rather interesting stuff. First of all, if you go back into like 2020, 2021, we're up here at about 400 million ounces. And we're bottomed around here, 2024, maybe 280 or so. We shot up a great deal in 2025. This was the tariff scare. Other people say other things. I believe it was primarily the tariff and other things. Big arbitrage developed, and we shot in a lot of metal from other areas, primarily London, into the Comex. It peaked out, and then a lot of that silver got shipped back. And so a lot of people are talking about how fast it's depleting. And that's true. We've seen it go from roughly 520 down to maybe 400 or below. So a good 100 million ounces or more in a fairly short amount of time. There's no disputing that. What's interesting, though, if you look at 2025, where we started and where we are now, we're still about 100 million ounces above that level right now, even with this depletion rate. However, if you extended this down at that flow rate, that amount of depletion per month, in theory, you would be down here pretty quickly. I'll just leave it at that. So we had a visual of Shanghai, part of it. We've had a visual of the Comex. And I found this morning, and I want to give credit. I'm not sure if this person did this chart or not. I'll give them credit because that's where I found it. And so let me blow that up. But this shows you the LBMA split between ETFs and free float. The free float is here in brown. And you can see that actually in January 2026, the free float, this brown line, was actually above what it had been in October, November, and December 2025. So it's actually above where it was the last 3 months of the year. Not substantially, but just something worth noting. So let's break it down. These numbers are not exact. I made some notes here to kind of make sure that everybody understands. This is like best effort basis. These figures change daily. But the Shanghai Futures Exchange, as far as the amount of silver they have, is roughly, I'm going to do round numbers, 11 million ounces. The Shanghai Gold Exchange market reported around 16 million ounces. So you can add that together, 16, so 27 maybe. And I can't freehand with this very good, but it's 27. Try to make that 2 better. And that's what's purportedly in China. And we've looked at London. Again, what they report is about almost 900 million ounces. The free float, however, is about 140, which I just showed you with that graphic a moment ago. So and it's a variable again. We could go to the low side and say 140. And again, this is not easy for me to do freehand, but that's 140. And then Comex, as I just showed you, with the 2 categories, probably a bit under 100 million ounces in the registered category. Eligible is not deliverable, as everybody probably has learned by now. Total somewhere around 380 million ounces. So we could round that up to 100 million and get that number. So what do we have? 100 there, whatever there and there. So really just not that much. I mean, 260, whatever that number is. I lost my my red markings. But the point is, in any given year, the average offtake in silver for physical demand is about 200 million ounces. So you might say we have a year's left, but the rate that it's been coming off the exchanges, moving off the exchanges to other exchanges, primarily into China, has been substantial, as anyone that follows this market closely is well aware. So it's going to be an interesting year, but I just want to make a few comments here on these notes. The Shanghai Futures Exchange Warehouse stocks reflects physical metal that can be delivered against futures contracts and is the most authoritative supply number of the Chinese exchange system. The SGE inventory is less transparent, but the market does report approximately 490 tons recently. These are relatively small amounts. I think we all know that compared to global stockpiles at the LBMA. Comex, the LBMA, was noted that the free float should be treated as a market estimate on analysis rather than formal exchange statistics, because they really don't give that to us very transparently. Comex is a little more transparent, but as it says here, a small register pool relative to total inventory can signal tighter supply physical availability for deliveries. When register stocks fall, inventories often transition into eligible status or leave CME vaults entirely. This split, not just total ounces, is central to delivery risk analysis and observable price dislocation behavior in the market. So I think that's just a good place to pause, have everyone take a look. Some people don't believe any of these numbers. If you don't, that's fine. I tend to think they're pretty valid, but you don't have to. But the point is that even though there is like 3.6 billion ounces of silver above ground stockpiles, it's referred to at times, I've used that word, doesn't necessarily mean commercial bar inventory that's readily available to be purchased, because that amount is what I just showed you. It's small, and it's leaving the Comex, the LBMA is pretty tight, and obviously the Shanghai exchanges are very tight. India just took a big dip into the silver market. Other countries are doing the same. The critical mineral list, silver's on it now. Will the U.S. government buy physical for the strategic stockpile? I vote yes. I think they will. How much and how fast is yet to be determined. Fundamentally, nothing's really changed. Obviously, price-wise, things have changed. And I'll just leave with the statement that I said very recently, and I'll say it on this update. The physical market definitely took over the price of silver, and we're in true price discovery for a few months. However, the paper paradigm with the high-frequency trading algorithms took command again. No surprise, especially at the rate of silver was increasing in the month of January. So now it's going to be a struggle, I think, between the physical reality and the paper paradigm, and I think it's going to go back and forth a few times. Ultimately, physical silver trumps the paper paradigm, and it always will. When we get back there, I think will be fairly soon, but no one knows for certain. So I just expect to see a consolidation, a trading range for silver and gold. Gold is far from its ultimate rebalancing of all the paper that's out there. It has much higher to go, and I think it's going to get there in fairly short order, meaning within a year or two. So if you're in the market, I would, if you want, sell in the strength. You could buy back depending what you want. I mean, if you've made a great deal of money in silver rapidly, you might rebalance. It's a personal choice. You don't have to be all in gold and silver to do well. 10% weighting, maybe more, slightly more, it's probably sufficient for most everyone. And then I just want to finish with promoting silversunrise.tv. It's at that URL, as you can see. All you have to do is press this button and watch it. It's about an hour and a half long, and 2.5 years to do this. It's something that, I put my heart in. A lot of people are in it. It's about, sunrise to levels and the stress, fear, and control that money exerts over our lives. Really, it's kind of a philosophical look at money. Obviously, there's a lot of basic facts that almost anyone that follows my work would know about without watching this movie. But after that kind of foundation is set fairly early in the film, it moves on from there. We explore a lot of things that maybe people haven't thought about on their relationship to money and how much control it has in their lives. And actually, you have the power you have the power to determine how much control it has over your lives. Now, if you're dirt poor, you're really in debt, and that's all you think about, that's a reality. I won't dismiss that at all. However, there are ways to mitigate the amount of control anything has over our lives. The personal power the human has really hasn't been developed or really taught or thought about all that often, especially in this high-stress society where everything seems to be very important outside of ourselves, when the exact opposite is true. No more philosophizing. I'll leave it at that. I wish everyone a great weekend. I'll be back next week with another weekly perspective.
The U.S. government debt is about to cross $37 trillion. That's not a typo. That's trillion with a T. Tariffs are being used to try and even the playing fields. Global supply chains are shifting. Inflation isn't going away. And the value of your dollar? It's quietly being drained while no one is really talking about this. The truth is, we're living through the early stages of a financial reset, whether anyone wants to admit it or not. And if you're still relying on mainstream headlines or financial advisors who just tell you to write it out, you could be blindsided when things really shift. That's where the Morgan Report comes in. For over 25 years, David Morgan has been helping investors cut through the noise. He tracks what actually drives markets, from precious metals and mining stocks to global debt and monetary policy, and show you how to protect and grow your wealth when the system is under stress. This isn't just about gold and silver. It's about having a clear-eyed view of where things are headed and making sure you're not caught off guard. The Morgan Report gives you real research, honest analysis, and strategies you can act on, even in a world of rising debt, unstable currencies, and economic uncertainty. Go to themorganreport.com today, download your free report, get informed, get ahead, and take back control of your financial future. Themorganreport.com, because $37 trillion in debt won't fix itself.